Good morning, you're watching Market Cafe on ET Now with me, Somit Sarkar, and my co-anchor Ankita Saxena. Now, given the fact that US markets were shut yesterday because of the holiday period, but how were the US futures trading, Ankita?
Absolutely, Somit, as you rightly pointed out, that the US and the European markets were shut for the holidays. US futures seem to be doing quite well. US stock futures rose on Monday as investors head into the final trading days of 2022. They are deliberating whether really, the Santa Claus rally will appear and lift the market, as they have been weighed down by recessionary fears till now. Now, Dow Jones Industrial Average future rose by 134 points, or 0.4%. S&P 500 and Nasdaq 100 futures has advanced 0.5% and 0.7% respectively. Now, if you remember in the Friday's session also, Dow Jones Industrial Average had closed up 176 points higher. S&P 500 also rose 0.6%, and Nasdaq Composite was also up 0.2%. So overall, right now, probably the festive cheer has trickled in, and investors are really hopeful and hoping for a Santa rally to kick in anytime. So that was what's happened with the US markets. How's the oil, the Brent and WTI faring, Somit?
Well, in fact, as US markets were also shut, if you see the commodities like crude and oil were also shut in trade, so no movement in that front. Moving on to global news, and firstly on China. Now, China will stop requiring inbound travelers to go into quarantine starting from January 8th, according to the National Health Commission. Now, this will be a major step towards easing curbs on its borders, which have been largely shut since 2020. China's management of COVID-19 will also be downgraded to the less strict category B from the current top level category A.
And US retail sales rose 7.6% during a majority of the holiday season, according to a MasterCard report. This period was between November 1st and December 24th. Steep discounts lured deal-hungry consumers. However, this year's holiday retail sales growth is less than 8.5% increase last year.
Well, the Toyota Motor Corp said its global output hit a record for November 2022. Now, this was against the backdrop of solid consumer demand. Now, the company warned of an uncertain outlook due to persistent shortage of semiconductors.
And Bank of Japan's Kuroda dismissed the near-term chance of existing easy policy. Markets and policymakers are signaling an increasing focus on what comes after Kuroda's tenure ends. They expect that BOJ will phase out its yield control under a new governor when Kuroda's second 5-year term comes to a close.
Well, Japan's jobless rate fell to 2.5% in November. The availability of jobs stayed at its highest level since March 2020, according to the government data. Now, the seasonally adjusted unemployment rate was down from 2.6% in October to close to 2.5% in November.
And Japanese Prime Minister Fumio Kishida will replace a government minister for the 4th time. Kenya Akiba, minister responsible for overseeing the reconstruction of areas hit by natural disasters, has been criticized widely. Akiba has battled accusations of being involved in violating election laws.
32 people have been killed in the brutal winter storm in the United States. Now, the blizzard brought Christmas chaos to millions of Americans and will be slow to dissipate, according to the US Weather Service. Emergency services are unable to reach the worst hit areas so far.
And moving on to the latest from the Russia-Ukraine war, Vladimir Putin has hinted that he is ready to talk, for talks to end the conflict, but claimed that Ukraine and its Western backers were refusing resolution plans. And the statements came on a day when Ukraine faced another barrage of attacks from Russia on Christmas. Meanwhile, Pope Francis called for peace in Ukraine in his traditional Christmas message from the St. Peter's Basilica at the Vatican. Now, the Pope urged all parties involved to surrender their weapons and spare a thought for those who were cold and hungry at Christmas. My colleague Srinjoy brings us more details on this.
When Russia invaded Ukraine early this year, it looked like the war would end in 5 or 6 days. But it hasn't. The war has gone on for over 300 days. And now there have been huge casualties. The Russian president says that the war should come to an end. He wants a diplomatic solution. This is something Prime Minister Narendra Modi has told Vladimir Putin, the Russian president, several times. There have been huge casualties on both sides. Russia has lost thousands of troops, so has Ukraine, and also civilians. There's been damage to property. Now, how does this war come to an end? That's really a difficult situation because, okay, if Russia says that there should be a ceasefire, Ukraine will say that all of Ukraine should be vacated by Russian troops. Now, how does that happen? Does Ukraine mean vacation of the Crimea? If that is so, this is something the Russians may not agree to. So it is a very difficult situation. It's probably easier to start a war than to end it.
From coal to cements to airports, now Gautam Adani has dominated headlines throughout the calendar year 2022. Now Adani witnessed his personal wealth surge to $58 billion with the help of his 7 companies. Now he managed to topple Amazon's Jeff Bezos as the world's second richest man, and he continues to with his M&As in the sector like realty, defense, solar and many more. Here's a special report on how Gautam Adani became the biggest gainer in 2022.
What a year it's been for Gautam Adani. The billionaire takeover tycoon has dominated headlines in 2022. Briskly expanding his commodity trading company into a coal to port to energy conglomerate, he is the only Indian to have built not only one, but 7 companies with a market cap of 1 lakh crore. Gautam Adani has seen a $58 billion surge in his personal wealth this year, the most among the world's richest people according to the Bloomberg Billionaires Index.
It is an accepted fact that India will remain a domestic, consumption-driven economy for a long while.
Adani's meteoric rise has seen him beat Amazon's Jeff Bezos as the world's second richest man, more than doubling his wealth in the last 1 year. Making it to the world's second richest person, Gautam Adani's wealth, according to the IIFL Wealth Harun India Rich List, has seen him add a whopping 1,600 crores per day, yes, per day, over the last 1 year. In simple terms, Adani's wealth gain in 2022 is so massive that the next 9 business barons would need to join forces together to combat their top competitor. In fact, author of Gautam Adani, Reimagining Business in India and the World, R.N. Bhaskar, shares some interesting tidbits.
One thing that differentiates Gautam Adani from other players in India is that he will never make a company go public unless he has first generated the profits. In other words, he'll put his own money, set up his plant, make profits, and when he's convinced that the profits are sustainable, he will then go public.
The breakneck speed of expansion of each of the businesses under the Adani umbrella has been in large part due to the shopping spree, with a host of mergers and acquisitions by the Adani Group. Some notable ones include the $6.4 billion cash deal with Wholesome, the acquisition of majority stake in Mumbai airports and the building of the Navi Mumbai airport, Adani Green Energy's acquisition of SB Energy Holdings for $3.5 billion, Adani Wilmar's acquisition of the Kohinoor brand, and the recent buyout of broadcaster NDTV. And a large portion of his wealth has also been pledged to charity, close to 60,000 crore rupees when he turned 60 in June this year, making him one of India's most generous philanthropists. From humble beginnings as a diamond trader to helming one of the largest business empires in the country, Gautam Adani's rise to power has been nothing short of ordinary. And the journey, it seems, has only just begun as he gears up for his next phase of growth in realty, defense, solar manufacturing, and much more.
Well, that was the roundup for Gautam Adani. Now it's time for us to quickly slip into a short break. You don't go anywhere. There's lots more action coming up on the domestic front on the other side of this break. Welcome back. You're watching Market Cafe with me, Ankita Saxena, and with me is Soumit Sarkar. Now, moving on to news coming in on the domestic front. The CBI has arrested the Videocon Group chairman Venu Gopal Thoot in the ICICI loan fraud case. Earlier, former ICICI Bank CEO Chanda Kochhar and her husband were arrested by the CBI in the same case. My colleague Anurag Joshi gets in more details.
Central Bureau of Investigation today arrested Videocon Group chairman Venu Gopal Thoot on the matter related to loans given by ICICI Bank to his conglomerate. The loans were paid to Videocon firms during the tenure of Chanda Kochhar as the MD and CEO of the bank. The CBI had arrested Kochhar and her husband Deepak Kochhar on Friday. The case is linked to ICICI Bank loans totaling 1,875 crore rupees to various Videocon group entities. Now, to give you a timeline of the events, in May 2009, Chanda Kochhar took charge as the MD and CEO of ICICI Bank. In August 2009, ICICI Bank had approved a 300 crore rupee loan to Videocon International Electronics. The following month, ICICI disbursed this amount, and subsequently this 64 crore rupees out of this amount was transferred to New Power Renewables, a company controlled by Deepak Kochhar. ICICI had disbursed an additional 1,575 crore rupees to other Videocon group companies from 2009 to 2011, and this is according to a court complaint copy from the Enforcement Directorate. As of April 2012, the outstanding ICICI loans to Videocon firms was adjusted to 1,730 crore rupees under a refinancing plan, and in 2017, the entire account, the Videocon loan account, was declared an NPA. It was in October 2018 that Chanda Kochhar had requested the ICICI Bank board to step down, and the board had accepted her request. And this had followed the start of an inquiry which was instituted by the ICICI Bank board to investigate the matter of the loans which were sanctioned to Videocon firms.
Well, we also spoke to Tamal Bandyopadhyay and Hemendra Hazari, and let's listen to what these experts have to say about the case.
Would not have flown then, it does not fly now, because the central and the main issue was conflict of interest. When Chanda Kochhar was on that panel, on that committee of ICICI Bank, which finally evaluated the loan to Videocon and then disbursed it, it is apparent to me that she did not disclose that there was a conflict of interest in giving that loan when her own husband has had business dealings with Videocon. See, no one is saying that he should not, as a spouse, he should not have anything to do with Videocon. The issue here was that she should have disclosed that there was a conflict of interest there, and she should have recused herself from that meeting.
But the point I'm saying, it's pretty, the record of CBI and ED for conviction, basically for establishing the culpability or the criminality of a banker is pretty poor. So we need to address that. It has to be a watertight.
Moving on, the largest private sector defense player in the country, L&T Defense, believes that they can definitely compete with the PSU players. Listen to why Jayant Patil believes the company has an edge over its peers.
It's some amount of conditioning to get into defense market. It does tend to be very, very slow, and all of us who are long timers believe that the pace comes in more because of the responsibility that we are a democracy. Anybody can ask any question.
Right.
And I think that's essentially where we know that what possibly can happen in a year takes 3.
Right.
And that's the pace at which things happen.
Are you worried about, newer players, newer private players as well entering the space? Would that impact profitability in any sense?
For Larsen Toubro, obviously, we take competition very seriously because anyone who's not in a protected market would need to be so. Fact is, we believe that the future is all about doing things here, the Atmanirbhar,
Right.
what the Prime Minister talks. Larsen Toubro's DNA is in Atmanirbhar because when the company was founded, it started that day. World War came in, the founders had nothing to do except doing things on their own, and that became the psyche of our organization, that we still do things, a lot of them our own way. Now it makes a huge difference in competitive game. The CIWS that I talked of, the close-in weapon system, we had an Indian solution, indigenous IP, indigenous know-how, and obviously we are L1. So when a foreigner brings in knowledge, obviously the foreigner in that case charges you for the knowledge, and that's essentially becomes a part of the cost. So if you are on a long-term focus, you need to have your own capabilities, and that to that extent, at least for some period, we believe Larsen Toubro will have a differentiator.
Right.
If others start investing, we are one of the largest investors in R&D. I started my career in R&D, and that's essentially where this is what actually keeps us ahead of most, because what you see in terms of the breadth at a place of this nature, or for that matter across my 7 manufacturing locations, this is not something which today most in the industry can talk of.
Right.
Now that's essentially where serious segment wise, but overall we are in a differentiated position, more because of doing things our own way.
Well, metals failed to shine in 2022 as soaring inflation and recession woes capped the gains for the index. Now, Ashesha joins in to break down what made this a difficult year for the metals.
After jumping over 70% to give the best returns in over a decade in calendar year 2021, Nifty Metal Index has been the 4th best performing index in 2022 after Nifty Bank, Nifty PSU Bank and Nifty FMCG. Nifty Metal outperformed the benchmark index to end the year with a 13% uptick. But it has clearly been a tale of two halves. Nifty Metal underperformed Nifty 50 in the first half of the year but rose by nearly 40% in the second half. Let's have a look at what really transpired in the metal space in the year gone by. Higher than expected inflation, monetary tightening by central banks globally, slowdown in the Chinese economy, and fear of recession led to a turbulent year for commodity prices globally. Rising geopolitical tensions led to an exponential surge in commodity prices in the month of February and March. Aluminium prices on London Metal Exchange rose by nearly 38% from the start of the year before peaking out in March. Similarly, zinc and copper prices also rose by 28 and 11% respectively during the corresponding period. However, not everything was as glittery all through the year. Just when we thought everything was going fine, ferrous industry back home had to face a setback. Government in the month of May imposed export duty on iron ore, steel and stainless steel to tame inflation. This led to a sharp decline in volumes for steel companies in Q1. Volumes for steel companies, for steel majors Tata Steel and JSW Steel dropped by nearly 21% in the first quarter on a sequential basis. In fact, some smaller companies, the likes of KIOCL, were forced to shut down their operations altogether due to financial unviability. On the 18th of November, government reinstated export duty to pre-May 2022 levels, but this offered little respite to steel players as steel export prices had now fallen below domestic prices. Stainless steel player Jindal Stainless, however, benefited due to increased export opportunity. Let's have a look at other news that made headlines during the year within the metal space. Tata Steel surpassed Tata Group's crown jewel TCS in terms of profitability in FY22. Much like its other business verticals, Tata Group decided to merge all of its metal companies under one basket. Interestingly, London Metal Exchange had to suspend nickel trading after nickel prices rose by a whopping 250% in just a matter of 2 trading days. NMDC demerged its iron and steel business, while Hindustan Zinc divestment also progressed well. But as we head into 2023, outlook on Indian steel demand growth looks quite promising. World Steel Association estimates steel demand in India to grow by about 6.7% in 2023 compared to a mere 1% demand growth worldwide. China traditionally has and continues to have a great bearing on global commodity prices. Resurgence of COVID-19 has again resurfaced as a cause of concern. A probable recession and its impact on global demand will determine how 2023 could shape up for the metal sector. But the big question now is whether the commodity upcycle which began in 2021 over, or was 2022 just a blip in what could be a multi-year commodity upcycle? This, of course, is anyone's guess.
Wow, that was a detailed roundup of the year gone by for the metal pack. Moving on, 2022 was a challenging year for the RBI and its governor, Shaktikanta Das. Now, how will 2023 be any different for the RBI? Here's a look at how the RBI governor steered the central bank during the challenging year of 2022 with many global macro headwinds.
RBI governors rarely get an extension, but Shaktikanta Das has had an eventful 2022 after getting one a year earlier. The soft-spoken, affable governor negotiated the 2 COVID years with reasonable elan, but 2022 brought with it another set of challenges. Early in the year, Russia invaded Ukraine, and with the war came a raft of US sanctions. Russia was soon ousted from SWIFT, the global financial transactions mechanism. Later, the West would impose a price cap on Russian oil. The turmoil in both financial and commodity markets had an inevitable impact on the global economy's nascent recovery. As central banks scrambled to control rising fuel and food prices, Shaktikanta Das was forced to rethink RBI's monetary policy, which was in accommodative mode even as retail inflation had hit an 8-year high of 7.79% way back in April 2021. Central bankers across the world believed that rising inflation was a supply-side phenomenon caused by the pandemic and the war in Ukraine. Governor Das, like Chairman Jerome Powell of the Fed, opted to keep monetary policy accommodative in the early months of 22. The role of monetary policy, he believed, should be to ease supply-side constraints by keeping rates low to encourage investment and growth. Alas, what central banks failed to recognize was that monetary policy acts with long and uncertain lags. Surplus liquidity and the Ukraine war were beginning to create a ripple effect. Both oil and food prices shot through the roof. Russia is a significant supplier of oil in global markets, while Ukraine is a major supplier of wheat and sunflower oil. Inflation was getting stickier by the day. Central banks changed tack with the US Fed raising rates in March. We were slower to react. Finally, in May 22, the RBI changed course. Rates were increased by 40 basis points, but surprisingly, the accommodative stance stayed. Unfortunately, it was too little, too late. RBI's hand was forced and it raised rates by 50 basis points at each of its successive meetings in June, August and September. December saw a more moderate 35 basis points increase. Come December, the rate was 6.25%, up 225 basis points in 8 months. RBI under Governor Das had to write a letter to the government explaining why the MPC failed for 3 consecutive quarters to keep inflation within the target range of 2 to 6%.
We will keep Arjuna's eye on the evolving inflation dynamics and be ready to act as may be necessary. Our actions will be nimble and in the best interest of the economy.
Retail inflation dropped to 5.88% in November, the lowest since December 2021. But it's facetious to attribute the decline to RBI's policy initiatives. Multiple factors are at play, including the fall in the price of oil and base effect. And it's too early to predict whether the decline will be sustained. Challenges remain in the form of a weaker rupee, falling forex reserves and disappointing industrial production. But Governor Das and India can surely look back on 2022 with a measure of satisfaction.
Well, before slipping into a short break, here's the lineup that we have for the morning show. Firstly, we have Milind Karmakar, the director and fund manager of Dalal Procha Portfolio Managers, joining us with his outlook for 2023, followed by Rajesh Jejurikar of Mahindra & Mahindra, giving us what's in store for the SUV market in calendar year 2023. And lastly, we have Umesh Revankar, the Executive Vice Chairman of Shriram Finance, the newly merged entity, and he will give us details of what we can expect from the NBFC sector in the next calendar year.
Welcome back. You're watching Market Cafe. Now, before we begin with the rest of the news, let's quickly mark the Asian markets. Now, China had officially announced that it will end quarantine for inbound travelers starting from the 8th of Jan. Now, this symbolizes an end of its zero COVID policy that it has held for nearly 3 years. Now, the nation has also downgraded COVID to a less strict category, Category B. The health authorities had announced that it will be downgrading it from the current top level of Category A. Now let's look at the markets. The Nikkei is up 0.4%. It's up almost 115 points. Kospi is also up 0.4%, and Shanghai has also inched up 0.3% in trade. SGX Nifty, as you can see on your screen, is up 0.3%, hinting towards a positive start for the Indian markets, as US futures are also seen, we have seen US futures also rising. So this is indicating a good positive start to the Indian markets as well.
Moving on to now stock specific news, and we have Lisa and Vamakshi both in our studio to give us all those details. Firstly, Vamakshi, to you, what are the stocks and news in focus today?
Well, absolutely. Good morning to all of you all. Let's first start off with Share India Securities. The board has gone ahead and approved a rights issue worth nearly 1,000 crores. Time Technoplast is the next one on our radar. The company has received a repeat order from Adani Total Gas for supply of CNG cascades, and this is for a total value of nearly 75 crores. The delivery of these cascades is expected to begin from January 2023. GR Infra Projects will also be on our radar after the company has been issued a completion certificate for construction of 8-lane access controlled expressway carriageway, and this is coming at a contract price of nearly 1,095 crores. NTPC will also be in focus as the company and Tecnimont Private Limited have gone ahead and signed an MOU in order to explore green methanol production. Now, the objective of this MOU is to explore the possibility of developing a commercial scale green methanol production facility. Kadeems is the next stock on our radar. Namrata Chotrani has resigned from the position of the CEO of the company, and the said resignation will be effective from the close of business hours on March 23rd, 2023. United Spirits is the next one we're focusing on. The company has fixed in January 6, 2023 as the record date for the amalgamation of Pioneer Distilleries Limited and the company. Now, United Spirits will be issuing 10 shares for every 47 shares held in Pioneer Distilleries. IRB Infra will also be in focus as the company said that toll collection on IRB Pathankot and Amritsar Toll Road Limited, which is one of the project's SPVs of IRB Invit Fund, has been temporarily suspended due to farmers' agitation in the state of Punjab. HP Adhesives, the lock-in period for the pre-IPO investors is ending today. Nearly 54.9% of equity will be out of lock-in. And lastly, we will be focusing on some action going on in the IPO markets as well. It happens to be the last day in order to subscribe to Radiant Cash Management Services IPO. The IPO saw 11% demand on the second day of sale.
Right, thank you for the details, Vamakshi. Now, we're not leaving you here. We are seeing that November was a quiet month for the housing sector. I mean, the demand and supply was quite weak in that month. So, Vamakshi, give us a lowdown on how this panned out.
Well, absolutely. And let's first start off with the demand and supply trends that we saw in the month of November in the housing sector space. We're seeing demand and supply both remain weak during the month, but let's first start off with demand. Now, absorption declined in the month of November, and that is only mainly on account of the base effect. Demand was down nearly 3% on a month-on-month basis and 2% on a year-on-year basis. We saw demand decline the most in the NCR region, where it fell nearly 11% on a month-on-month basis, and that was followed by Bengaluru as well as Chennai. That was it for the demand, but what about the supply? Launches continued to be soft and were down marginally on a month-on-month basis, but were down 26% on a year-on-year basis. Now, with demand outstripping supply over the past year, unsold inventory saw a decline of nearly 9% on a year-on-year basis. Bengaluru, Pune and Kolkata witnessed the maximum rate of correction in the inventory, which fell within the range of 17 to 19% on a year-on-year basis. As a result, it is no surprise that average prices are up in all cities when we look at it from a year-on-year perspective, with NCR recording the maximum price appreciation. So those were largely the trends that Nuvama has seen in the month of November, but let's also look at their outlook going ahead. Now, in their opinion, realty stocks are attractive from a midterm perspective, given rising consolidation and improving cash flows. They also believe that despite rising interest rate and housing prices, sales momentum would sustain, particularly for organized developers. So on the back of that, they're actually quite upbeat on the housing space in the midterm, and DLF and Shobha remain their top picks in the housing space. Back to you.
Well, thank you, Amakshi, for all those details. And we had a couple of analyst meets, and firstly on Mahindra SCI, if we see, Lisa, what are we getting from the Motilal Oswal note? What are the key takeaways?
Yeah, so, well, good morning. Mahindra CIE at its management meet with Motilal Oswal, they have updated on their business, and they said that they are witnessing strong traction in their India business. Their EV order wins is also gaining momentum, and with this, they are confident to outperform the domestic auto industry by 10%. With focus on profitable growth over sales, they are passed on an average of 60 to 70% of the cost inflation. They are focusing on reducing the investment, with large part of their capex allocated to their India business. And another thing is that the change in name will help to get foothold with certain OEMs who weren't comfortable with the OEM-owned supplier. So that's the update coming in from Mahindra CI, and that will be in focus in today's session.
Right, Lisa, we'll ask you to stay back to give us some more details on IndusInd Bank. Now, IndusInd Bank is in a very comfortable liquidity, has a comfortable liquidity position, and is also estimating a higher teen growth. Give us more details on, the fact that IndusInd Bank is really set for a positive start in this year.
Yes, Ankita, absolutely right. IndusInd Bank at its management meet with Antique, they have said that their healthy lending momentum will lead to high teen growth in FY23 and over 20% growth in FY24. Their comfortable liquidity position is leading to narrowing in a gap of their term deposit rate offering versus the large banks, and the improving asset quality is also leading to credit cost, which is expected to trend lower. Further, the RBI's approval for current MD and CEO's tenure extension is a key re-rating driver for the company. Back to you.
Well, thank you, Lisa, for all those details of key important management means. Along with this, we should now look at HEG. Now, that is one stock that will be in focus because the company has incorporated a wholly owned subsidiary to carry out its capital expenditure and to house its new business, that is the graphite manufacturing graphite anode for lithium ion cells. Now, this is something that the company had indicated earlier in the month of November, but it is now moving forward, and it has formed its first wholly owned subsidiary. Now, what the company plans is to do an investment of close to 2,000 crore rupees over two different phases. In the first phase, they will build a capacity of around 10 to 12 MWH, while in the second phase, the capacity would expand to around 20 to 22, and this is expected to complete in the next 5 to 7 years. Now, according to Jefferies, the sales to capex ratio is expected to be 1:1, which means that the estimated payback time could be around 5 to 6 years for this capital expenditure that the company has planned. Now, why the company is doing this capital expenditure? Because graphite is one of the most important component when it comes to the lithium ion batteries. Now, a typical 1000 lbs battery, electric car battery, would require nearly 190 lbs of graphite, which is the highest compared to other components, that is nickel, copper, cobalt and lithium. Now, along with this, there are a few other triggers that would be working in favor of HEG, and firstly is the fact that the graphite electrode prices have been rising, and it has up around 11% from its recent low. Along with this, the Indian government's PLI scheme mandates around 60% domestic value addition for cell production, and China's reopening could also spur the demand when it comes to graphite electrodes. And also there has been a strong commentary coming in from Graftech, which is the world's largest producer of graphite electrodes. And lastly, if you see, the US steel market has also been more resilient, and utilization rates in US has been higher, which could lead to more graphite electrode demand going forward. Lastly, couple of risk factors that one should keep an eye out for when it comes to HEG. Firstly, there is again a risk of COVID scare in China. So if any further developments on that front could impact the demand, and then again there could be volatility in prices. So these are the couple of risk factors that one should keep an eye out for.
Right, and moving on to some volatility that's been lacing the markets. Now, what names should you be picking in your portfolio? Experts give out their top pick recommendations for you to navigate the markets in 2023. Now, listen into what Sanjeev Bhasin, Siddharth Bhaiya and Jigar Mistry had to pick.
I think the worst of IT may be behind. You'll have another quarter or so. And you know, if I could put my money, Nasdaq below 10,800, I'd buy a lot of those stocks. Okay, a lot of the bad news is in those stocks, 50% and beyond.
Just wanted to ask, you said that Tech Mahindra or the IT sector may see not that great numbers, but markets are already priced in. That's what you're trying to say.
They're priced in everything and to eternity. Look, these are cash-rich companies. They work on outsourcing and the new themes, whether it's AI or cloud computing. They are very, very ingenious in how they are working. And none of them have given any warning. You know, the only thing was HCL Tech 15.5 to 13.5. We may be at the lower end because of budgets. And the markets make a lot of... Also, Anisha, it tells you that this year has been a tale of two cities. Yeah. If you were stuck with Infosys and you didn't migrate to ICICI, then you are saying this is not a bull market. But then you have to smell what's going on around you. And you have to be aware of the PSU banks were the most hated. And now suddenly people have risen to the fact that they exist and they are profit making and they trade at half-time price to book. So Tech Mahindra would be my top pick over there. The BFSI space, the alliance with British Telecom is a very, very sweet spot. And I think Tech Mahindra is perfectly fitting the bill with hardly any downside and maybe a 40% upside if things get back to normal. See, I'm a person who's always positive, and I think geopolitics and Fed are all getting priced in.
No, well, absolutely. I think if 2022 had to be summed up in one sentence, it will be the sector churn, because that was the key highlight that really worked out for people this year. But, you know, the sector churn is something that we also saw in the auto sector, Siddharth, right? You still are bullish on it when it comes to 2023, but would you want to make the distinguish between, let's say, the two-wheeler, the four-wheeler? Because this year it was a lot about commercial vehicle followed by passenger vehicle. Do you finally think it will drill down to two-wheeler vehicles as well?
So I was yesterday and I was speaking to somebody who's related to Hero Honda, and I said last 20 years I've heard number of times the death of Hero Honda, and it is still there. So at some point in time, two-wheeler growth will come. See, I put out something 6 months back saying everything was negative for the auto sector. Right, oil prices were high, commodity prices were high. The EV story was supposed to, kill a lot of these companies. The only thing was that the auto index for over a 5-year period had delivered negative returns.
Sir, well, the main objective is to start bringing down the waiting period for SUV, says M&M's Rajesh Jejurikar in a special interaction with ET Now. Now, the company has definitely been a trailblazer this year, defying the overall trends in the sector. Here's a sneak peek of that chat.
Firstly, the most exciting thing for us is the XUV400, which is our first electric passenger launch in a long time. That's going to start with test drives in January, and then we start deliveries across Feb and March. So that is exciting, and we've got a lot of very good positive feedback on that. We will announce the prices sometime in the middle, early middle of Jan.
I'm sure it'll be competitively priced, knowing you all.
Yeah, and it should turn out to be a good launch as well. So that's right now what's immediately on the anvil. We're doing a few interesting things on Thar, which we'll talk about in early Jan. We feel the opportunity to grow the category is there still. Of course, we've literally created this category because, when we launched this a couple of years back, nobody thought that anyone is going to buy a two-door. And we've really created the two-door category in India, and there's opportunity to do more. So we're going to do stuff with Thar as well. And of course we have all these launches which are so recent, so we've got to consolidate on them. A key priority for us now is to start bringing down the waiting period, and the time to say, okay, so much is the waiting period and feel good about it is, I don't think that doesn't make anyone feel good, neither us nor customers. So our priority now is to say waiting period is down, we are able to deliver a lot and get the vehicles across to customers.
Well, with that, we are completely out of time on this show, but you don't go anywhere. There's lots more action coming up on the market, which is the next show. Thank you so much for tuning in.